Welcome to the Cyber Business Podcast, where we feature top founders and entrepreneurs and share their inspiring stories. Now, let's get started with the show.
Matthew Connor here, host of the Cyber Business Podcast, where we feature successful business leaders, top law firms, green energy companies, and more. Today, we're joined by the founder and CEO of Select, Carlo Cisco. Carlo, welcome to the show.
Yeah, thank you for having me.
Thanks for being on. Before we get too far in, a quick word from our sponsor. This episode is brought to you by CyberLynx.com. That's CyberLynx.com. CyberLynx is a complete technology solution provider that ensures your business not only has the most reliable and professional IT service, but also has the right cybersecurity solution to ensure your business stays productive and safe. Many businesses think they're too small to be a target for cyber criminals or that they can't afford good cybersecurity, and that's simply not the case. We've had so many companies come to us for help after they were hit, and they're always surprised because they thought they were too small to be a target. The fact is, small and medium businesses are the target of most cybercrime, and every business can afford proper cybersecurity. If you think your business is too small or you can't afford cybersecurity, check out our website, CyberLynx.com. That's CyberLynx.com. And now back to our show. Carlo, thanks for coming on the show today. I have so many good questions for you. For those who are not familiar, can you tell us about Select?
Yeah, sure. So Select is a digital membership service and community that connects people with exclusive events, savings, and perks at over 1 million locations all across the world. So we've basically reached out to top restaurants, hotels, retailers, sports teams, really pretty much everything under the sun to design this like lifestyle improving program where our members will get access to exclusive, ongoing, and unlimited benefits at all of these places. So think, 20% off or a free round of drinks. Discounts can actually go as high as over 60% in some categories. And everything's ongoing, everything's unlimited.
That's fantastic. Can you give us some examples? What are some examples of things that some of the benefits?
Yeah, sure. From like the brand side of it, we've got partnerships with like BMW and Hyatt and a lot of these big global brands. We also have a lot of the like top hospitality venues in the country. So for example, we have Michelin starred restaurants in every single city that they're awarded. We have some of the highest grossing restaurants in the country like Tao or Komodo or STK or BOA. Just to name a few. And then on the benefits side, it varies a bit by category. In dining, it's typically going to be some combination of priority access and then some sort of tangible benefit. There always needs to be a tangible benefit with Select. So typically, that could be 20% off a round of drinks. Sometimes it's a combination. It really just depends on the venue. And there's no sort of like time limitations. You can use it whenever you'd like. That's a key factor of Select as well. We want people to use the program as much as possible. We want people to, trust all the benefits that are offered. So for example, if we see someone do a better offer somewhere else, they're removed from Select until that changes, right? So we, are pretty rigid about what we need. But, on the flip side, we're not typically charging merchants. And I say typically because there's some cases where we get affiliate, but that's pretty rare because that's never the focus. And then, most other categories are going to be some sort of discount typically. Hotels will have some experiential stuff. Sports might actually, but generally speaking, it's going to be mostly discounts, and it'll range pretty significantly. For example, if you're buying a car, especially post-COVID, they can't do like as big of a percentage off, right? But it's typically something below dealer invoice, whereas right now most cars are way above. So it's still a good benefit. And then like in hotels, for example, where it can go as high as 60% or over, I think year to date, we're pacing at about like 24.8% lower than the lowest rate online. So those savings really, really, really add up over time if you're traveling a decent amount. And that's a global program. So it doesn't matter, it's not limited to the US. If you're anywhere in the world, that's typically going to be, some degree of helpful. And then, but I would say like typically 15 to 30%. And we really span everything. We've got retail brands, we've got food and drink, we've got sports teams. It's really meant to improve as many areas of our members' lives as possible so that they engage with Select more.
That's awesome. So walk me through this because I
Yeah.
love we recently got in, I'd say about 3, 4, I don't know, 4 or 5 years ago into Michelin restaurants. At first we were like, what? How can that possibly be? And then we kind of got sucked in with a 1 star, 2 star, 3 star, and now we've become kind of foodies. Honestly, it's wild. And so how does this tip? How would that work? Right? Do we go to how do I use if I'm a select member? How do I use that next time I go to a Michelin restaurant?
Yeah, it would have to be a part of the program, and I think we have about I don't know, it's a little over a dozen, I think, in the U.S. that are participating in Select. I know in Miami, for example, I think there are 12 Michelin restaurants. We have 3 of them on the program, but generally we would recommend reserving through us, especially if it's going to be a higher end restaurant. And then like we have points of contact at every venue. Obviously, we have relationships and agreements with every venue, and then basically every venue's following a process to make sure that you get the benefit you're entitled to when you go there, right? And that could be round of drinks, discount. That depends on the venue. We directly negotiate that. We have certain parameters that we won't go below. For example, you're not going to see a 5% discount, right? That's kind of miscellaneous. That's almost like in sort of like credit card perk land. So we want it to always be meaningful, and it's typically going to be 15 to 30 or drink something like that. And it's every time you go. So if there's a place that you really like and you want to go every day, actually, you can do that with Slack.
That's fantastic. So, as a general rule, I would imagine with the general rule, you go through. I'm assuming a portal. You go through. You do the reservation there, and then. So, for a car, for instance, you mentioned you partnered with BMW. If I go out to buy my next, a new BMW, I don't buy that through the portal, right? How's that work? I go to the dealer, tell them I'm a select member.
Yeah, so it's a little bit more seamless than that, and it can vary, based on the brand. But generally speaking, and I think in the case of BMW and Mini and the other brands that they own, we have like a co-branded portal where essentially you're sort of like pre-registering the interest in buying a car, and that relationship is with corporate. So because it's with corporate, you can go to any dealer and exercise that. Now, dealers, might not love it, but it doesn't matter, right? It's a corporate program. It's in many ways actually similar to what they do for their own employees, as if you were like an employee of BMW. So it's a pretty cool program, and we actually used to have that with Land Rover, Range Rover also, but they unfortunately canceled all partnerships after the pandemic as that surge hit. But thankfully, a lot of our members got there in the in-between time and scooped up some Range Rovers at a discount.
That's fantastic. So, yeah, speaking of the pandemic, how did that affect you guys? I think it
Yeah.
affected everybody a little differently.
Oh, for sure. Yeah, it was an interesting seat to be in, the select seat with a major event like that, right? Like we span everything, but especially at that time, our biggest categories were dining, hotels, and events, right? So those are the top things that members were using us for, and all of those things closed. And it was also kind of unfortunate timing. We'll probably get to the credit card later, but we had just gotten our first couple term sheets for the credit card at the beginning of that year. That was something we were working on for a while. We had just gotten into actually my last trip, just as the pandemic was starting. I think maybe there were 2-3 cases, something like that. I went out to Silicon Valley for this pitch to do plug and play fintech, which is like an equity free accelerator where like VCs and corporates kind of vote on thousands of companies to get into this like smaller batch of a few dozen. And we did get into that. And then weeks later, the world changed, right? So we were about to fundraise. We decided not to. We were about to do this credit card. We decided not to. We really wanted to heads down focus on our members and our partner businesses. So on the member side, and actually it helped businesses too. Like we started innovating the benefits very, very quickly. So we started, doing a lot of takeout and delivery benefits, for example. And now like Uber and DoorDash are kind of proliferated. They actually weren't quite at this time, especially in the tier of restaurants that we were working with. So that was valuable for people. we started to add a lot more like at-home focused lifestyle benefits. So people could order food to their home or cookware or whatever, all the things that were going to be like more naturally needed now that this was occurring. Home office furniture is another one, right? We're really trying to think about what people need now. We also canceled a few of our in-person events before we had to, but in April, I think we hosted like, I don't know, 15, maybe 18 digital events. So we knew like, hey, like our customer demographic, perhaps they're not as financially impacted as others, right? But like everyone's impacted by this. You're suddenly stuck at home. A lot of these people are used to going out, being social. It was a tough time. So those digital events were actually very popular. We saw hundreds of people tuning into those, and they could be, sit downs with entrepreneurs or cocktail making classes. We fitness classes. Actually, we did a pretty big range of stuff. And long story short, our revenue did go down that year because we cut our marketing spend significantly because I didn't feel right marketing during that period. People were still signing up, believe it or not, but I didn't feel right marketing during that period. But our member renewal rate actually went up. So we saw a lot of this like deal hunter M&A where they were kind of like hoping we would be in trouble and they could scoop the program. And I was like, no, we're not interested. We're fine. See you later. And it was nice to be able to do that because the calculation was let's support our members and they'll support us. And then not to make the story too long, but we did some of that on the business side also where, look, we're a startup, we're venture backed. So we had access to a lot of resources that maybe a restaurant owner doesn't, right? Like we have investors telling us about PPP and how to do all this. So we were sharing those resources basically with the entire merchant community that's on Select, which is hundreds of businesses. So I think people like that too. Obviously someone like BMW or Hyatt, they're going to know what's going on, but a local restaurant owner might not, a local spa owner might not.
Very cool. Well, let's talk about that because we love founder stories, and so I'd really like to hear your founder story. How did this come to be? How'd you go from idea to first employee? Just the whole thing.
Yeah, it's a great question. And, Select like kind of bridges a lot of things, but a lot of them are like elements of past experience I had. So for example, I started my first business when I was 18. It was an event planning and promotion business. I was effectively a club promoter, very random. But the story of it is actually kind of foundational to Select. Essentially what happened is like, I like to like work. And then especially at that time, if I have off time, I want to have fun. I want to be somewhere that's cool. So like I would figure out where to go. And what started happening is like people that were even outside of my friend group would like basically follow where I was going. And then someone's like, hey, you can get paid for that. Why don't we try doing an event together? Right. So we do this event in like this area. This is in Miami, in this area of Miami that is now very nice, used to be dangerous, the design district. And we brought over 600 people. So like it was this huge event. After that, like every club owner, every restaurant owner was just like calling me. I'm like a 19-year-old or 18-year-old. I don't even remember. But so that's kind of how that started. And that was my first foray into like connecting customers with local businesses. And it really helped with that foundational understanding of hospitality, which is the part of this model where like almost every business that's attempted this in the past either doesn't even touch that or just like fails horribly there and can't figure it out. So I had this like foundational understanding of that was helpful. I also have a finance background. So I was doing all these positions across various areas of finance and, investing and that kind of thing. But then the other big inspiration, so I was in equity trading and actually left to join Groupon back in like 2010, 2011. They were in the process of becoming the fastest growing company in history. And this growth was so insane for those who aren't familiar that I believe that's actually still the case. I don't think anyone's past that growth because you're talking about a 2-3 year company that was doing billions of dollars in revenue, right? So pretty wild. And I got to help build Groupon in Japan, which I really had no business doing. They just liked that I was like entrepreneurial. They figured with like the equity trading background, I'm probably pretty smart. I knew someone who had gotten recruited there, congratulated him. And a few phone interviews later, I'm moving out to Japan. And what I saw there was, like this huge demand for a new way for merchants and customers to connect, right? That was what was staggering with Groupon. And if you think about how businesses marketed before then, and they weren't the first daily deal company, but they really hit, you know. Like before, businesses would throw money at marketing. They didn't really know what it was doing. This was no risk. You do the marketing, people come, and then yes, you're kicking money back to Groupon. You're giving this customer a big discount, but you're getting someone in your business physically, or to purchase online later with Groupon goods. That's compelling for sure. But it had a lot of problems, right? And that's why Groupon is not doing so well right now. There's not a lot of longevity. There wasn't a lot of quality control. There were all these stipulations. So I just didn't really see it as like a good fit for premier customers or premier brands. Like basically all other areas of marketing, like restaurants can't really do that. It makes it look like they're in trouble, and like, the herd mentality kicks in and people don't want to go, right? Like it could be a good place doing a Groupon, but like the psychology of it just sort of changes. And you also had businesses that would try to like game it because, the discounts were so big. And then Groupon's average take was 45%. It was typically 50. It was only below 50 because of partnerships with like McDonald's or Starbucks that they would use to like sign people up. So yeah, I just didn't think it worked for that customer base. And I felt like, having a membership model where the customers are curated, right? They have to apply, they have to pay an annual fee, but then they're getting these uncapped benefits at these merchants who are also curated, typically good experiences. And we like to have a range. Michelin starred places are great, but we also want the neighborhood sushi spot. We also want that like super trendy venue, whatever the case is. We want, a diversified use case, but for a somewhat similar customer set. So we really just kind of started pitching it to businesses. We didn't have a website. We didn't have anything. And we had some places that had never done any sort of external offer before, so effectively buy into the vision of what we were creating. And then, of course, over time, things started to take.
So I love that. I mean, there you are. You're going into these businesses, no website, no nothing. And you're like,
Right.
Hey, I've got this idea. What do you think? And they're like, oh, okay. Yeah. Right. So you're able to sell them on the idea before you have any members, any
Right.
website, anything. How long does that go for? Do you build up a I guess a bank of kind of partners, if you will? I'm not sure what the right term is there for that, for venues. And then once you feel like you reached critical mass or enough, then you started working on the website. And how'd that work? What was your number? What was your thinking? How'd that go?
Yeah, great question. So we were working on the website in parallel. Like we knew, like, as soon as like we could see that there was interest, like we were committed to the idea for sure. So we were building that out in parallel. So that definitely came to be along the way of doing this. But like we did need like an initial bank of benefits before really having customers, right?
Right.
I think on the hospitality side, we started in New York. I think we had about 50, 60 restaurants. We had like a few lifestyle benefits, a few other things, not that significant in the other categories, but then we felt like that was enough to go get customers. And I think a lot of people will do like a free beta to try something out. We didn't do that. What we did instead actually is we set up a table at New York Tech Day and like pitched people to like sign up and pay on the spot. And we signed up our first, I think, 24 paying customers, right? And it's much better, in my opinion, to learn from people who are paying for your product than people who are receiving it for free. And I just don't like the business model of free products either, unless you're going to be the next Instagram, which is very unlikely. Those are typically not good business models. And then what we saw right away with that is that, it had actually gone a bit in the opposite direction, right? Where we had all these merchant partners now, a few thousand locations, if you're including the initial hotel groups and some of this other stuff. But then we had like less than 50 members. So we're like, how do we solve that problem? And we got a little lucky. We started to pitch, and this is before it truly launched, these like residential buildings. And then this, yeah, so this, basically take amenities outside of the building, which I think is still smart, right? Like all these buildings fight this amenity war. Rents are very comparable. Everything feels the same. If one has this like concierge that's hooking you up all over town doing events, that's a memorable thing if you're a resident of a building. So this company, UDR, kind of like believed in that vision, and they actually fired this concierge they've been working with for like 10 plus years, plugged us in there, and then it had great engagement rates. I think that concierge service was doing like an ish, and like no one was using it. And then we saw like 70% within like the first month or two, which is really high when you're giving people something for free. It's not that easy to engage people. And they helped a lot. We did events in the building. They helped with marketing, all that stuff. But long story short, it was effective. They ended up expanding to all their New York buildings. And then essentially we started to layer direct consumer on top of that. And at this time, like we hadn't really raised external, we had like friends and family. I had money in there, but like we were running like super lean during this period. But then like once we started to bet on marketing, then that started to take also. And that really helped.
Well, now I'm curious because you keep saying we at this very early stage. Who is we? Is it just you, the kind of the biblical we, or is it you and what are we looking at?
No, so I always had a team. So I had in between Groupon and Select, I had another startup, actually, Food Fan, restaurant search and discovery engine. You actually got great user traction because we were using, it was Pandora style. So we were using like unique characteristics. So all the search engines picked us up because we had data points that other people didn't have, but like took longer than I expected to build, like first tech company. I just didn't see it being a market we could win in. So I essentially transitioned control to one of the other co-founders, but I took some of the team with me to go start Select. So we had, I don't know, probably 4 of us really from the very beginning. And then, added people even shortly after, like within the first year, it was about 6 or 7 of us by the time we were doing an accelerator program and that kind of stuff. I remember having the most seats in the accelerator program because for most of the other companies, it was like, a couple co-founders or whatever. Yeah.
Yep. Well, let me ask you. So when you decide, hey, look, I like this, you're about to kind of branch off and start Select. The 3 or 4 people that you brought, what are the skill sets you brought with you? Who are these people?
Yeah,
good the starting team. Yeah, the starting lineup.
So you need tech, right? So brought an engineer. You need biz dev to go build these relationships. So brought someone that could do that, and then sort of like a all hats type of operations person, and then myself, and then I'm trying to think. We might have actually brought 2 engineers from Select, to be honest.
Mm-hmm.
I'm sorry, from Food Fan, because we wanted to have a website fast, we wanted to have an app fast, and look, we had a publicly traded client before we launched, so like we were in the big leagues kind of right away. So we had to execute fast. So we actually probably had 5 people at the beginning, with 2 of them being engineers.
Wow. Okay. And just out of curiosity, from my inner tech, how long did it take to get your website and your app up and running?
Yeah, so it was much faster. Once you've done it before and you kind of know what you're doing. So it was probably like 3-4 months, I would say. Some founders can struggle with that for a year plus. I did with my prior startup. Yeah, it's hard to get the right people to do things the right way. And look, to be honest, like we were all learning too. There's plenty of things that have now been rebuilt.
Mm-hmm.
It is not the same code base as it was in 2015, but a lot of the back end infrastructure and that kind of stuff is the same, and it scales and all that. But it was much faster this go around because we knew what we were doing, and like it was sort of like getting MVP out there, improve. A lot of people try to make something perfect before they put it out. That's a waste of time. You need people to like tell you what they want. And people also that people underestimate, like customers like to see something evolve and improve.
100%. Yeah, I think a lot of people get, especially founders, get stuck on that perfectionism. Yeah, they want it to be perfect. It's my baby. It's got to be perfect when I launch it. Well, if so, your baby's likely going to die of malnutrition before it's
Yeah.
born. I mean, that's just the way it's gonna go. So you got to find that right balance. Well, so let me ask you. So you've gone and you've started with your starting lineup, your dream team. You get things going a little bit. You said that you're venture backed. At what point did you transition from Carlo backed to venture backed?
Yeah, and I had some friends and family that helped out too. But I definitely wanted to kick things off. I had done really well investing in the market, so I just had the capital to do that, and I felt like if I'm starting a business, I should be the first one to bet on it, right? But technically, the first institutional investor would be the accelerator program we did, which is Entrepreneurs Roundtable Accelerator. I effectively felt like they were the best accelerator program in New York. I did not want to move the team out of New York. New York was our only market. It's also the biggest market, right? So I didn't, necessarily want to pull everyone over to the West Coast, where some of the other good programs are, YC, 500 startups. To that point, there weren't hybrid programs. Everything was in person. So you would have to pull people away. So we did ERA. That's the first sort of institutional check. And then during, these programs, typically 3-4 months, you have a demo day. But before demo day, we raised from like an angel group, a family office, and then some angel investors. We had great traction just going through. And then demo day is kind of a nice catalyst for startups to be like, hey, I'm about to like present this to a room of 500 plus investors. Do you want to be in before that or after? Sort of,
Nice.
you can use that as a forcing mechanism. So we most certainly did. So it was within the first year of the company that we were starting to bring in institutional investors.
Fantastic. Okay, so earlier you'd mentioned that a card. So, and you passed up on going the credit card route during COVID,
Yeah.
and now it is back on the table and on the roadmap.
That's right. Yeah. So we were actually able to announce it. I have one. It's actively working. We teamed up with a company, Deserve, which is managed card programs for a bunch of companies, MasterCard and Celtic Bank for the issuing bank. It's a World Elite MasterCard, so we were able to negotiate to get it into the top tier. It's the first time that a new entrant that's not a top 10 issuer is in that tier. But that was important to me. I wanted to be able to do a 2% cash back on close to everything. So right now the card is in like employee only testing mode. It's gotten a lot of great coverage because it's so unique, right? If you think about the benefits of these cards, there's some points, a concierge, maybe there's 2 or 3 things that are ongoing or somewhat interesting. I remember because Business Insider did the launch announcement, they were covering Amex. Before Amex had like 40 things. I think like 3 maybe are ongoing. Most of those 3 are also capped. So there's not, uncapped value to those. Our list is like, it was over 800. Everything's uncapped. Everything's unlimited. Just about everything's completely unique. So it's just a different universe of potential cardholder value and a different universe of experience too. A lot of these programs are designed to make things difficult or confusing to redeem. Amex is actually a fantastic example of that because if you redeem for cash, it's like, the typical assumption is that like a point is like a penny. That's unless you're an Amex cardholder redeeming for cash, in which case it's 60% of a penny, right? So there's just a lot of stuff like that we don't really like, that we think is a little misleading and silly. And companies have effectively gotten away with like very minimal added value because it's so hard to break into that space. Looking at the market today, you can see a lot of startup trading apps, a lot of startup debit cards. There are still not a lot of startup credit cards, right? It's a much bigger undertaking. So the banks have basically benefited from that and have been able to be pretty slow on innovation as a result.
Wow. So now, how does that work or how will it work? I guess. Do you have it worked out currently? Like what the plan is? Will there be an additional fee for the credit card? So you purchase a membership, and then once you're a select member, you can then purchase the credit card as well. Is that how that works? Or
So you'll actually be able to come in and get the credit card, and the membership comes with it. So the two will be the same annual fee. And it's really about what you prefer, right? We think the credit card makes it a bit more convenient. It perhaps helps people consolidate annual fees. We know that the current membership base is interested in it, but let's say you, I don't know, really love your Sapphire Reserve card or whatever.
I do.
You can you can still be a select member and use that card. And you can use it across all of the benefits. Now you won't get, the 2% cash back. You won't get the World Elite benefits, but you'll get everything else that Select comes with. So I think we'll see a good degree of both. And it's useful to have both. Like we're starting to do some B2B stuff with the membership, but again, and like you can't really do that with a credit card. It's a little tricky. And then also, with the membership, that basically like the marketing channels that are good for each are actually pretty different. So it kind of like opens up a much wider audience of course, addition to the fact that way more people are looking for a credit card than a membership. The membership is more perhaps something that you don't know you need. Whereas like the credit card you need, you need to have that. So why not have the best,
Yeah. Oh, that's brilliant. Cause I mean, I think when people think of membership cards, they think, what that old school diners card, right? You think membership. Yeah. Yeah. Costco memberships. And it's like, okay, fine. I get it. But really, when you hear about all the benefits that you get from your, from the select membership, that's brilliant. And I don't know of anybody else who does that. And then you combine that with the credit card, you get the best of both worlds. That's just brilliant. So well done. I love that. That's fantastic.
Yeah.
And
so,
so the future looks bright. I mean, what's the growth plan here, moving forward, as this card kicks off, as on the membership side, what are you looking at where you are now versus, the future? What can people look for here?
Yeah, and that's the exciting part about being where we are today. Certainly, in 2021, as COVID started to become less of an issue, that before this year was our best year. We signed up a ton of members that year. Revenue grew over 50%. This year, the membership is going to profitably double. So if you exclude what we're investing in the credit card, the membership on its own will profitably double. The interest has really picked up. The marketing channels are working. We've been like testing new things that have helped accelerate that effectively. And last year we had to be kind of heads down in build mode, building out all the tech for the credit card, going through all the compliance stuff. There's quite a lot that's involved with that, even when you have great partners like we do. So now, like with all of that done effectively, we get to work on things that are meaningful, and we did last year too, but more so now. We get to work on effectively growth and making the product as awesome as possible, and that's a really fun seat to be in. So we do think growth is going to continue to accelerate. We're going to be very aggressive there. Following this announcement, we've seen a lot of publicly traded company inbound. We also just started rolling out a partnership with FanDuel, where we're powering benefits for some of their VIP members. So they're important customers, and that was also inbound. Very smart strategy, actually, because if you think about MGM and Caesars moving into their space a bit, getting into digital with they have their rewards programs with a couple dozen properties or whatever. FanDuel comes to us. It's like, hey, we're the leading digital platform by a lot. I actually didn't realize how much of the market they owned. And before it was literally 50%. So they're the same size as every single other player in that market. They're like, we're the leading platform for this. You're the leading digital benefits platform. Why don't we tie you in, blow them out? Brilliant strategy.
Wow, nice.
So that's a cool application of it. I'm sure we'll see others that are like that, and it works so long as the end user demographic fits with the ecosystem, right? Because at the end of the day, it's kind of funny, like categorizing the startup with investors, right? Because they always want to think, is it consumer? Is it fintech? Is it a marketplace? It's all of those things. But probably if you think what is it actually, number one, it's a marketplace, actually. It's a marketplace that people have to subscribe to, but it's a marketplace. And for the best businesses and the best customers, and it unlocks uncapped value. So I think we're just excited for growth. The other area we're going to start getting into that we started to talk about is private market investments. That feels like a natural extension of what we do. We can leverage our investor base to get into these deals that are very hard to get into. Like, a lot of people don't realize, like, venture is actually, on average, so this includes the losses, like the highest performing asset class. It beats real estate, it beats private equity, it beats the stock market, it beats everything. But it's hard. You have to basically be able to get into the right stuff. And I've seen friends like cut 50K checks or whatever, like based on like, this people have good PhDs. Like, no, that's not what you do. Like, it's got to be like traction oriented. You need to fight your way into difficult deals, not, like take what comes to you. So we think we can really help our members with that. We think that's a new way to improve how customers and businesses connect. And we also view it as like a good step into broader investment management, because, like, there's going to be the largest wealth transfer in history over, the next decade or two. And I don't think the younger generations sort of want the same things that their parents did necessarily. Like, I think the brands that carried a lot of weight, maybe people feel differently about. I'll ask people about some of those brands today, and if they're Gen Z especially, they'll be like, cringe, like that's the literal response.
Yeah.
Plus, they're not offering the tools that people want. People want alternative investments. They want startup stuff. They want real estate stuff. And there's a lot of great platforms for some of the other stuff. But I think the startup stuff is still pretty open, because you just need really great relationships. And then look at on the flip side, like, we can actually be a pretty good value add investor for those companies, because we've got all these business relationships all across the world. We've got customers in 12 countries. Like, we're kind of on the pulse of the market for the segments that we're serving. So it feels like a natural extension of what we do, and one that we're also very excited about.
Yeah, why do I get the feeling that we're going to hear about a select incubator coming up in the not too distant future? I can see the wheels turning there. You're like, yeah, we could do all kinds of. This is awesome. That's exciting stuff, man. Exciting.
Yeah, thank you. Yeah.
Well, I tell you what, I've loved this. Can you tell people where they can find out more about you and Select?
Yeah. So, the company, just meetselect.com. So meetselect.com. I'm on most platforms with my name, Carlo Cisco. I make myself easy to find, but my inboxes get super crowded. So bear that in mind if you're reaching out.
Well, I think this was great. I think the future for Select is super bright. I'm looking forward to seeing a lot of those things come into play, and having you back on anytime you'd like. Come back on the show. Tell us more about what you're doing, because I think this is exciting stuff that people are just love hearing about. So, Carlo, thanks for coming on the show today. It's been a pleasure, and we'll talk to you next time.
Yeah, thank you so much for having me.
Thanks for listening to the Cyber Business Podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.